Hey, good morning, everybody. It's Hammer. Today is Friday, December 12th, 2025. I got crazy kitties going on over here, bouncing around there, catch my attention. So, TGIF, I got to tell you, TGIF. Hope y'all are having a fantastic morning, and I hope you have some fun plans for the weekend. We'll talk more in a minute. So anyway, my name is Hammer. Y'all know me. I am the founder of Originator Success, Grab and Go Social, and Rate Sensei. Those are three amazing products to help my loan originator and mortgage broker friends get more business. We help you get found online, generate reviews, stay in touch with your clients and agents. Grab and Go Social helps you to get out there and build your social media presence. And Rate Sensei helps you with the rate stuff. So anyway, remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. Broadcast on Facebook and YouTube. Pretty soon, I think I'll start adding the gram and the other stuff. I gotta do that as we head into the new year. So if you're here this morning, say good morning. If you're watching on the replay, all I ask is that you give me hashtag replay in the comments. Let me know that you were here. Let Facebook, YouTube know that you were here. Remember, you can go ahead and get a live reminder. If you want a text message that I'm going live so that you can hop on, just sign up for our alerts at hmmr.io/reminder, hmmr.io/reminder, or you can use this cool QR code over here. If you're on your phone right now, take a screenshot and then go back to your photos, press and hold that QR code, and it'll actually load for you, and you can sign up for the reminders. Also, while you're signing up for things, consider signing up for our daily email. This goes out to about 13,000 originators every day. Check it out at ratelockadvice.com. Check out this QR code over here, and you can sign up for that. Remember, that comes from Hammer at ratesensei.com. So if you sign up and don't see it, you got to check and see. It's something to do with a lot of times something's blocking that email address. So also, you can sign up for our text alerts, www.ratetextalerts.com. I'll tell you more about those in a minute and why those are so great. So if you're here this morning, say good morning. Now, down at the bottom, you will see the question of the day. Question of the day. I've been in a music thing lately because I'm listening to music to start. Ghostbuster song was on this morning. Ray Parker Jr. Remember that? Who you gonna call? Ghostbusters. Louder. Ghostbusters. I can't hear you. All right. So who was originally supposed to sing that title soundtrack for Ghostbusters? And if you listen to the beat and the sound of that song, it sounds like this group, this individual and band, it sounds like their music. Like you can really tell that it was their song. And apparently they were pretty pissed because the song got ripped off. They wrote a lot of that beat and everything, and then it kind of got reused. So somebody got paid, Ray Parker Jr. got paid to do a cheaper version. I don't know if any of y'all have ever been undercut by somebody that did. Now, I'm not saying Ray Parker Jr. didn't do a good job. I mean, I do like the song, but, and if you guys need a hint for the question of the day, this same band did the music on the soundtracks for why am I drawing a blank? Michael J. Fox, the Time movies. What are the name of the Time movies? Not Back in Time. Back to the Future. Back to the Future. So that band that did this music for Back to the Future was supposed to do it for Ghostbusters in the 80s. I don't know if you knew that. Let me know if you knew that, by the way. All right. So anyway, good morning, y'all. Great to see all of you. That's right. Holly Johnson, you got it. That was a Huey Lewis and the News song. Holly nailed that one. And let me know if you guys enjoy the little music trivia that I'm doing in the mornings. I didn't do one yesterday. I was busy, but let me know if you guys like those and I'll stick with them. And if not, I will go ahead and wipe those out. So I don't know. I just thought it's been fun. It's been a fun little thing. So great job. I think what I need to do is I need to start giving out gifts. I need to give out prizes, and then that would make it cool. And maybe not every day, but maybe just, certain times during the week. Let me know in the comments. I think they're fun. I need to know from you guys if you like them, though. And if you guys think I should give out gifts, let me know in the comments on that. So, all right, I've wasted enough time. Let me go ahead and show you what we got going on this morning. Load this up and get this ready, and we will get it going. So again, I know I didn't say hello to everybody individually, but hello all and welcome. Y'all know I love you. So I'm going to go ahead and let me bring up my captions. Okay, so first things first, a quick recap about what happened yesterday, and that's we're going to be looking at this chart right here. This is the 48-hour chart. Everything in front of this dotted line is what happened yesterday. Everything here is what's happened today. So if we take a look yesterday, you could see that we were continuing to see things improve. And I'm going to put this on 5-day for a minute. So you could see after the Fed meeting, look at this. We saw the Fed meeting. That was Wednesday, and it kept going up on Thursday. And then it started to kind of fall back down. And you could see this was the summit right here. This was the summit right there. Yesterday, we kind of saw things that were peaking right about here as pricing was coming out. And as we went on through the day, it kind of worsened. Now, because that happens, I want to remind you that we have our text alert service, and I'm going to throw this up on the bottom of the screen so you guys could see that. It is at www.ratetextalerts.com. This is an example of what we do. So yesterday at 4:12 p.m. Eastern time, the end of day text said mortgage bonds lost a bit of ground through the day. The 10-year yield is creeping back to test support, making it a bit less optimistic. Rate sheets can improve tomorrow, especially with no data coming. No urgency to lock loans closing near the end of the month or later, but loans closing near term may want to consider locking for protection since most rate sheets are a lot better than earlier in the week. Now, I know many of you already subscribe to our texts. They're $7 a month. If you don't subscribe to these, I'm going to call it out. You're being silly. Even if you're a member of MBS Highway or any of the other services, it's just great to get that other point of view. And for $7, come on, man. This is just, but yeah, we saw that yesterday. That was kind of the point here. So bonds started the day with gains, but they fizzled. And yesterday showed some signs of weakness of it coming to an end, prompting that late day advice to go ahead and consider locking some loans. Now, today, rate sheets are going to be a little bit worse than what we saw yesterday. So yesterday we were doing well, probably, right around that 6.25-ish mark. You're going to see it jump back up to that 6.30 mark today. It's going to get worse. Most of that is because of this morning's losses. If we take a look here, we're currently down about 9-10 basis points on the day. You can see it right here in chart form. If we want to look at the candlesticks, I'll show it to you in the candlesticks, and then we'll talk about the 10-year. But you could see that yesterday we were above. Let me change this to 3 months so we can get a little tighter here. So yesterday, the 5.5, we were above that 50-day moving average. And then today, look at this, we're back below it. So that's a little disconcerting. This 50-day moving average really not giving us much as far as technical support or even resistance here. We've had resistance the day before. This was kind of like, it was tough to confirm that break. That's what that is. It's so close. And then we're back below it. And this is just a small signal when you look at the technicals that traders, it's tough to see improvement. Now, next week's going to be a busy week, though. Remember, we've got 2 inflation reports and BLS jobs data. This 10-year treasury yield also telling us a story, 418, 419 right now, back up above. That was the high. Remember, the high that it reached was 418.6 right here. That was on Tuesday, and we are actually right back up at that level. So although it went back down and it was below the green line, which is the 100-day moving average. And then yesterday that gave us a support, because remember, we don't want yield to go up. That's actually a bad thing. We don't want to see the yield go up. And yesterday you could see here, if we kind of zoom in on this, you see, remember, the top half of this candlestick is called the wick. That shows us that it was trading above it, but it ended the day at the body right at that line. And then this morning, boom, we're up above that line. So that's actually a little bit frustrating. It would have been nice to have seen us just be down a little bit, but that shows us that markets, they're kind of back to letting go of that relief rally. It's gone. It looked like it might have some legs rolling into next week, but it's gone. Today, there's nothing on the calendar. We got nothing that we have to worry about here. Reprice risk on the day is low. I don't think we have to worry about seeing mortgage bonds really lose a lot of ground. We're down about 10, 12 basis points, maybe as much as down 15 basis points as pricing comes out this morning. That'll show up on morning rate sheets. We would need to lose an additional 10 to 15 in order to see reprices. That would be a really, really big loss. And other than there's 3 of the Fed speakers out there that are chattering today, but otherwise there's really not anything that should drive that. So reprice risk on the day is low. Hopefully we won't see that. Fed outlook, actually there's not really anything to say. It's easier to just pull it up right here. That expectation of Fed rate cuts heading into January, right now, it's about an 80% expectation that rates will remain the same. We've got about 6 weeks and a lot of data. So that is really where we could see if this column goes down and expectation of a cut goes up, that could change. And remember, the reason we got a positive reaction in bonds after the Fed meeting is because the Fed was more dovish, less hawkish, really more than dovish, but less hawkish than what was feared and expected. And that's why that kind of helped out. So a couple of other interesting articles I wanted to share with you this morning. If taking a look at the headlines here, I'm going to go ahead and pop those here. We've got Fed officials spar over whether rate cuts risk credibility on inflation. There were some comments that Powell made in his press conference that inflation is showing signs of easing back after jumping through the tariffs. And that's kind of what this next week, that data is going to be important. Even though it'll be corrupted data because of the government shutdown, it's going to get a lot of credibility. It's going to get a lot of views because they're looking to see if that inflation has settled in. So this article, Fed Reserve officials reinforced Friday why this week's rate cut was so contentious, with one arguing the central bank's credibility on inflation gives it room to keep easing if the labor market softens, and another warning that cuts could squander decades of hard-won gains in anchoring price expectations at a low level. And there's some truth to that. We're seeing a lot of division amongst the Fed members about where things are going. So one of the dissenters, Kansas City Fed President Jeff Schmidt, said Friday morning he opposed cutting rates because he doesn't see evidence that interest rates are putting downward pressure on inflation by slowing economic activity. So why would you cut if you're not slowing down inflation when we need to be slowing down inflation? Philadelphia Fed President Anna Paulson, and again, these are funny because these are 2 names you don't normally hear, right? Will become a voting member of the Fed's rate committee next year, and that's key. Largely echoed the case Fed Chair Jerome Powell made on Wednesday in support of the cut, suggesting the central bank should leave all its options open at the coming meetings. On net, I am still a little more concerned about the labor market weakness than about upside risks to inflation. So all of these, that's why markets are going to be looking at what happens next week when we get the BLS jobs data on Tuesday. We're going to get CPI inflation data on Thursday and PCE inflation data on Friday, according to what I saw on Mortgage News Daily. I'll double check it. But holy smokes, are we going to have a lot of that? And there's some volatility there. So loans closing near term. Let me change this on the bottom here. Near term, I would consider consider locking, cautiously float the rest. So I'm going to save this and put this up on the bottom here. My advice, generally would be to anything closing near term. Yesterday was the best time to lock. Rate sheets this morning are going to take a bit of a hit, but it's not big. It's not like rates jumped, but it's still, we don't know what Monday and Tuesday are going to bring. We definitely don't know what Tuesday will bring because that'll be the BLS jobs data. But that could also, if it's weak, that could actually help push rates lower. Depends on risk, right? So keep that in mind. Let's see what y'all... Kimberly said, can I drop the link for the text alerts? I sure can, Kimberly. That's the reminder. Hold on. The text alerts, you can use this QR code. I think I can put a link in the chat. Let me type it in the chat. I don't know what I don't know what happens when I put a link in the chat. I don't know if it shows up on each of the things or not. So, but I did do that. Randy said, my desired prize, Austin, doing a full review of your social media. All right. Good to know. Good to know. I'll see what I can do with that. I was thinking a t-shirt, but that's something too. Y'all did not let me know, by the way. Nobody said anything. So if you didn't say anything, I got to figure that's apathy, and apathy means Do you guys like that I've been having, that I've been posting that I've been doing the trivia? And then should I keep doing the trivia? Maybe not do it every day, but maybe do it a couple times during the week and maybe give away a prize. Let me know in the comments what you guys think on that. I really want to know. So otherwise, also, I've kind of tightened up the format of the show. Let me know what you guys think. Send me a DM if you want. I just have been trying to give you kind of a little bit more structure to it. So on that note, what are y'all doing this weekend? I am going to go and watch my little songbird, my daughter. She is in a choir program, an adult choir group, and they will have a performance this weekend that I'm going to go see. Still love watching her sing. All parents, you know what I'm talking about. You never get tired of watching your kids sing, even when they were terrible, when they were in like second grade. But my daughter's definitely not terrible. So I love to watch her sing. So I'll be going to Charlotte and then coming back. I'll be watching the Panthers playing the Saints, looking to take first place in the NFC South. Did not see that on my bingo card this year. I figured they might be 7-10, and they still might finish 7-10. Right now they are 7-6 though, and sometimes they're maddeningly bad, and then sometimes they're really damn good. So it's been fun to watch this season, parodying the NFL. So that's what I'll be doing. Hope you all like my outfit. Do you see my Christmas moose? Have you guys seen this on TikTok at all? It says Griswold on the back, right? It says Griswold. This is from, well, I won't tell you where it's from. Maybe I'll ask that as a trivia question next week. So Holly, wrestling weekend. Trivia is fun. Price is even better. Randy, especially love your singing it. Exactly, man. James, I locked 2 loans closing before Christmas, a couple of days before the Fed meeting. The plan was to take what we had and not get greedy. If rates did improve after the meeting, then we could reprice. Yeah, and they didn't. I don't think you saw enough improvement that you could reprice better. And depending on when the week before the meeting, you know, those rates were actually the same as where we're at now, James. So I think you did good. I was advising to lock the last week of November, and it was only when we rolled into the first couple of days before the Fed meeting that I was locking the first week of December, and then rolling into the 9th. I had to look at a calendar over there. The 8th and the 9th, that's when we switched to a floating stance. So all right, I'm gonna wrap it up this for now. I hope you all have a fantastic day and a fantastic weekend. Have fun, and please let me know in the comments if you guys want to do that stuff. I'll see you later. Have a great one. Bye-bye.